Good evening, everybody. My name is Phil Carr from MC Mortgage Solutions. For those of you who do not know me, we're based about 50 metres up the road on the right-hand side between Bear Traps and the Juice Shop, across from DBS Menswear. A little bit of background for myself. I've worked as a mortgage broker for the last 5 years. Prior to that, I've worked with Suncorp Bank for 11 years. I got asked to join up with my brother and his business in 2013. His background, again, like mine, is finance. He had the benefit of working in Suncorp for about 9 years before going over to the UK, where he spent some time with the Royal Bank of Scotland as a relationship manager there. He came back, had the option to join up with his old co-workers and thought, nah, go out my own, start my own brand. So he set up the business in 2007. From there, he survived the GFC. And in 2013, he chose to expand his business by incorporating me. Ever since, I have left the bank. The environment has been continually changing. It's definitely kept me on my toes, which is not necessarily a bad thing. Everyone needs to keep their finger on the pulse when it comes to their finance. And I guess where we've really found some hurdles in the last 3 years, 4 years, is with relation to judging the actual living expenses versus the true figure. So I'll touch base on that in just a moment, but I thought I would go through and just sort of let you know exactly what we do as a mortgage broker company. So our business is not just residential. We expanded from resi. We do small business, we do commercial, we do asset finance, we do shop fit outs, just to name a couple of things. We deal with small business, big business, and from there it allows us the ability to pretty much really encapsulate everyone to give them the best possible outcome. From a residential point of view, it's not just first home buyers, it's investors that we love dealing with. We also help from the point of view of ensuring the best possible outcome for everyone's financial needs. As I said, it's all about keeping your finger on the pulse, and with finance, that is very important. So the reason that I'm here is to have a quick chat about, I guess, the Royal Commission. What's happened, how to get this far, what's coming. It's not going to be a long, boring, drawn-out thing. The reality is it's been a long day. Finance will generally put people into a small coma. So if we can avoid that, then it's probably the best for everyone. So I guess what I want to ask is, who has read anything about the Royal Commission? Does anyone know what's happening? David?
Oh, bloody hell. I should have. Well, it sounds like it's pretty bad news for banks, but anyway, I'm sure you can tell us.
It has. Yeah. It's been bad news for banks. It's been bad news for clients as well. It goes both ways. So I'm going to be really rude. I'm just going to read off a couple of statistics as to what's actually happened. Because if I don't get this right, and it's being recorded, then, oh God, we're in a bit of strife. So the reality is the banks have been plagued with scandal for a number of years. The reality is the Royal Commission came into play because of some unethical issues with relation to financial planning back in 2014. Okay. The focus started with the financial planners of the majors, so CBA, Westpac, ANZ, and NAB. They slugged their clients with about $178 million in financial fees for services which were never actually provided. The banks discovered long ago that there was a ability to sell their product to their customers purchasing their financial product, and it comes down to the point of advice. Purchasing their financial products, they would enjoy a profitable feedback loop. This business model is known as vertical integration, and the financial advisors investigated said of the said bank, that they found the advisors failed to comply with their customers' requirements. That was 75% of the advice given was unethical, because they were feeding it back in to the business that owned the business anyway. Does that make sense?
Yes.
Cool, excellent. In addition to that, one of the Big Four has actually admitted that its financial planners charged fees to clients who have actually died.
You're kidding.
What?
Yeah.
I read that.
Financial planners charge fees to people who are dead.
Who did? Yeah.
No longer
Charge
here.
onto the estate.
Yes. So it's not just the poor financial advice that has affected the bank's customers. The advice has combined with reprehensible behaviour by the bank's employees. So since the 1st of July, almost $250 million in remediation has been paid back to their clients because of unethical standards. Okay, that is with relation to the way the banks have been doing things. That's one sector. Since July 2010, almost, already said that one. There you go. So the $250 million that's been paid back was paid out to over 540,000 clients.
I never got
Go
mine.
check your statement.
That is with connection to home loans.
Yeah.
Really?
Yep. So think of it this way: if you've turned around and I think it equates to about $3,700 per client. So and that's just because they've turned around and sold a product which does not meet that client's requirements. I don't know what the definition is there, but it still doesn't change the fact. The poor conduct includes fraudulent documentation. This is another one. Fraudulent documentation, processing of administration errors, and breaches to responsible lending and obligations. In addition to that, almost $90 million has been paid to almost 17,000 customers for financial services, so financial planners. Over $128 million has been paid to the consumers for financial service entitlements for poor conduct in connection to add-on insurances. So the reality is, it's not just financial planners, it is lenders, it is the personal loans, it is the bank staff, it is insurance. You know, like it's not just solely isolated to such a small little area. There's also
Is that due to KPIs?
yes,
That's to
greed.
KPIs.
It is all about greed. This is where this all comes down to. It's corporate greed, it's personal greed, it's whatever. The reality is, and I'm going to go off script here, and my wife's going to love that. Working in a bank, you turn around and you're on a modest income. So when I was working in the bank, I was about $38,000, $40,000 a year. In addition to that, you had the capacity to earn short-term incentive STIs based on your cross sale. So you could open 10 accounts a month, and you tick that box. You could be referred 5 credit cards a month. You tick that box. You then turn around and refer personal loans and insurance. You know, if you hit those boxes, you might be eligible for a $1,000 bonus, $2,000 bonus, $5,000. The problem is, the benchmark or the goal kept being moved. So you've got these people who are reliant on those financial incentives, especially with the way the cost of living was increasing. You needed to hit that to really have some financial gain. What's happened is everyone took that a bit too far. There has been reports within one of the banks whereby, let's say there was promotion for personal loans. You turn around and there is no application fee. The client didn't know that. So what did the bank do? The consultant or the manager instructed the consultant, what you'll do is you'll charge that person $300 cash. So they were then pocketing that cash, they were splitting it between the manager and the consultant. And they've done that 10 times a week. So that was one of the known things that has come out from the Royal Commission. The reality is, and I said to Gail earlier, the banks were approached and said, the banks were approached by the Commissioner and said, well, give us your top 3. All the banks disclosed the worst thing that they could think of, the top 3 things. It's all public knowledge now. They haven't had to look for it. The bank has openly said, these are the problems. And it's just come from that.
They were going to find it.
They're going to find them anyway, yeah, like anything. So that's essentially where it is. The biggest thing that's happened this year relates to the counter-terrorism, anti-money laundering counter-terrorism. Happened in Sydney, Melbourne, everything along those lines. I think worst case scenario, there's $1 trillion bill coming to one of the banks, if not all the banks, relating to that fraudulent activity. It's like 54,000 breaches on the money laundering laws. Like, it's just amazing. How they got away with that, I don't know. It came out, everyone knows that. Two of the three banks involved with that have that's a different story altogether. There's been allegations of collusion between three of the four big banks. That comes down to the bank bill daily swap rate. Does anyone know what that is?
No.
Bank bill daily swap rate is effectively the way the banks dictate their home loan rates or their business lending rates, the commercial rates. So they will turn around and say the bank bill swap rate is 2%. That's what the bank buys the money for. They will then lend it at 5%. Three of the four banks turned around and said, right, let's set the benchmark up here. So that way it plays to their advantage, make more money. Of that, two of the banks have admitted fault and have paid $50 million penalty each. The third one's currently under legal. They're currently fighting the charge.
So just on that,
yes.
Does that mean that lending rates will come down?
No, I doubt it.
So they carry on doing what they're doing?
No. What you'll find is it'll probably come on parity. The rates have been so competitive in the last 3 years that it probably you're not going to see them any better. If anything, rates will start to increase. The official cash rate with the Reserve Bank has been unchanged for, I think it's almost 2 years now.
Yeah.
There is talk that the official cash rate will not change till 2020. That all comes off the back of consumer confidence. So if consumer confidence doesn't pick up and people don't start spending money, there's probably an incentive not to spend money. But once consumer confidence levels out, people start going out to restaurants, they start buying everything again, everyone starts getting a little bit more comfortable, then rates will start to go up again. But I don't think there's any chance that they're really going to be dipping much more. It's as low as it's been forever, the last I've ever seen it.
Are they doing anything? Sorry, are they doing anything to stop the banks from recouping all these fines from their customers?
No, not really.
I didn't think so.
No, there's never going to be a point where the bank can there was I haven't written about it because there is a point where earlier this year they've charged the banks like a GST. There was talk about that not being put onto clients, but there's always a way. The banks like going to the casino. You know, you can never beat the bank. It's the reason when you go to a fixed rate home loan, you never turn around and go, "Oh, I'm going to do this because the bank's going to go up." The reality is the bank's always going to win. You fix a loan because you want peace of mind. You want certainty that that your budget's not going to be blown out for the next 2 years. I know when I fixed my loan years ago, it was just solely because rates were at 5%. If they went up to 6%, I was done. So it was a way of giving myself peace of mind to ensure that that I was okay. Subsequently, rates went down and I was kicking myself. But
Is it fair to say that there was a culture?
Absolutely.
It was invested. This was a culture. It wasn't just a fad. It was invested. It was backed upon. It was not shied away from. Is that culture slowly being?
They have to change it. They have to. I was at a conference last week, and essentially, with everything that's happening, brokers are getting a bad rap, and I'll touch on that in just a minute because it's not good. Brokers are invaluable to the environment, to the industry. 70% of home loans or business loans are done through broker arm. If people's confidence is so harshly judged based on that, then we shouldn't be negative 15. As a confidence point of view, we should be greater than that. 70% of all lending is done through brokers. Like, you can't question that figure. So I don't know where the confidence got that, but that came from the head of NAB.
When I started watching the Royal Commission,
Yes.
the first casualty seemed to be AMP.
Yes.
Now it's the big four banks.
Yes.
Does it stop there, or because we haven't heard anything about the second or third level banks, the lower levels, or is it just the big four with greed?
The big four, okay, the lower level banks you'll generally find are associated to the big four.
Okay.
So you look at Suncorp.
Has the culture filtered down?
Culture's everywhere.
We don't know yet.
You look at any industry where you're driven by sales. There's always going to be a certain level of culture associated to that. You want to hit your targets because, like in the banking industry, if you didn't hit your targets, you get put on a performance review.
Exactly.
So if you don't hit those targets, you're out the door.
That's right.
That was the reason I left the bank, was because of that culture because of the
that
drive.
comes down to the individual's ethical issues working for the bank, perhaps.
I think so. Some people were happy to do it, some people aren't.
That's
The people that my old team that I used to work with, it's kind of nice to have them, sort of one of them in particular, come back to me and say you left at the right time.
Yep.
Because it's, you know, the drive for that, I guess, those benchmark goals has just beaten them. They've taken the life out of them.
Yep.
It's so horrible to see. And I think that comes back to when I joined the bank was fun, it was great. They rewarded their customers, they rewarded their clients. In turn, they gave their customers great customer service experience. As soon as you strip away that reward, then you've lost that.
I did work in banking a long time ago, so I know that.
Yeah.
So it was, you're right, you're dead right, it was fun.
Yeah, Terry.
But now,
I met Terry because I worked at Suncorp with his wife. We went away to Stanthorpe for a weekend. We paid for our own weekend away.
What, you and Terry's wife?
and what Terry's mates.
It's all right, Ian, it's on tape.
The reality was, it was such an enjoyable environment to work in that we wanted to spend time with each other.
you became your friends.
Yeah, we became mates, and you know, I haven't seen Terry for a while, but that's okay.
Been off seeing No, but we did. You're not only just did that. We used to hide the boat, go out on the boat.
Yeah, they were great times. And this
Parties at my house all the time.
Yeah, absolutely. Where I used to drink a wee beer. But it was great. It was a really good environment to work in. And then what's happened is the greed aspect of it just got too much. You know, in a corporation like that, you need to turn a profit. If you don't turn a profit, your shareholders get annoyed. If your shareholders get annoyed, your CEO gets annoyed because he's not getting his bonus.
And this concept of letting the team down.
Absolutely.
The team environment in the bank.
Come on, step up or step out. You know. Yeah. So it was great. It was great at the start. By the time I left the bank, it was toxic. Yeah. You know, it had its. I think the last 3 years of my career, actually the last 4 years of my career with the bank, were some of the hardest years, just because of the motivation about being there. So anyway, we digress. Where were we up to?
So what's the forecast for the future?
The forecast for the future comes down to play with a number of things. What you'll find is the lending environment, like from a home loan point of view and business or personal, it's going to get a little bit tougher. And I guess what that is the policies became so relaxed in the last 5 years, or even 7 years, that they needed to do a course correction. Okay, interest-only lending is pretty much the reason why there is a big focus on brokers and bank lenders. The reason for that is interest-only lending only have, like, especially for home loans, investment's fine to a degree, but home loan lending as interest-only was always going to be a fragile, delicate situation to manage, because what happens in 5 years? So interest-only has a 5-year lifespan, generally speaking. Once you hit 5 years, it's unlikely for you to be able to request a further 5 years without a full financial assessment of your position. So what's happened, and one of the cases was, I think it was in Melbourne or Victoria, Victoria, New South Wales, was a client who turned around and she had a home loan. And she went, right, that's cool, we can pay that. We want to build up an investment portfolio. So in the course of 3 years, from 2013 I should say, so 2010, 2013, they had their home loan, they bought 3 investment properties. The investment properties were interest only, okay? And those interest onlys would to revert to principal and interest, so that means you're paying your capital down. That happens this year. Now, she got a notice from the bank saying, hey, look, your loan's changing to P&I, and they had a little heart attack about it because their repayments went from being, you know, hypothetically $5,000 to $8,000 a month. Now, if you're on maternity leave or you have chosen not to engage in full-time employment, then that's going to cause a bit of grief. Now, when they went through their home loan application to find their contract, to find out exactly what happened, why is it going to interest only, they thought they set up an interest-only home loan. They then discovered that there was a 5-year term. They've turned around and said the bank never told us about that 5-year term. Then they went for a bit more of a scutter through it and realised that their basic living expenses were understated. Which brings me to the next point. Basic living expenses. I have got some homework. It'll take 2 seconds to do. Okay. Let me just quickly run this out, and I want everyone to have a look at this.
Let's all get out. We bought all the cold
That's
out.
it. That's right, you know all about it. Give you the anyway.
Oh, so, nothing about what I'm doing.
You did. You don't have to do it if you don't want to.
Hey, but I've stopped drinking
I
since then.
think there's enough of that.
I'll tell you what you haven't got here.
Pets.
No. The eldest son moving back in because
It's boomerang children. Yeah.
That should be right at the top.
kids moving back home is the phase, bro.
That's why you got to.
With their friends.
You can't go to the house. You've got to go one bedroom
No,
unit.
can't do that.
Okay, so the top left-hand corner of that page, I've got an estimation of your basic living expenses. So you'll estimate your monthly expenses without actually thinking about it. Just have a guess. Drop them down up the top left. Because then what we're going to do is have a look at that in a little bit more detail, and then I'll explain in more detail as to what the banks are looking at. That's all right, Nick. You don't have to do
Is
it.
this in a family environment?
Family environment, your current personal situation.
Right.
Because I'll explain, while you're doing that, I'll explain it anyway. Okay, so years and years ago, what would happen is when you used to have an application with a client, the first question is, how much do you spend per month on basic living? That was never questioned by the bank. The bank, you turn around and say, right, family of five, $1,500. Oh, okay. Pretty conservative, but you know, your word is your word, so we will take you on that. It then came out that in 2013 that we were understating clients' living expenses, so they introduced something called HEM. So HEM is household expense metering or management or something along those lines. Now, they used to then turn around and say, well, based on a family of five, so 2 adults, 3 children, your HEM is now $3,500 per month. And you go, oh, right, well, that seems a little bit more justifiable. So when they brought that out, you used to go, right, client, how much do you spend per month? And they say, well, we spend $1,500. You go, well, actually, based on HEM, you spend $3,500. So we've got to utilise the higher figure. Now, it's come out since the Royal Commission that HEM is not necessarily correct because it doesn't factor in certain other aspects of everyone's day-to-day life. So they're bringing in this great little chestnut called the, where is it? Lavish measure. So lavish measure is now factored in based on your income. So they turn around and say, rightio, well, you're on $80,000 a year. Based on the lavish measure, you spend $50,000 a month on general basic living. So that then removes your current lending from $337,000 down to $195. I can't read my own writing. So it has a significant variation, and it flows on from that. It comes down, you know, 80,000, 100,000. HEM was 32.5 per year, which gave you a borrowing capacity of 484. Based on the lavish, so increasing income, increasing living expenses, 327 was your borrowing capacity. A lot of the banks are implementing this now. ANZ do it. CBA are in the process of doing it. Suncorp have an unreported living expense, which is, from a servicing point of view, you must service your loan by a minimum of $500 per month or $1,000 per month. They don't tell you that, but that's what it is. This is why jumping onto internet banking and doing a search on the online calculators is so wrong, because it gives clients a misguided understanding of their true capacity.
Well, it's the same in real estate. People
Exactly.
go and they say, well, the
Price guide
website
says that my house is worth $700,000.
And that's all right. That's not what the market is.
Yeah. So this is a part of the environment which is changing. Another thing that's changing is something called an assessment rate. So banks aren't looking at your home loan or your prospective home loan as if it's 3.5% or 4%. They're looking at it as if it's 7.25% or 8%. You know, because they've got to factor that that increase into, what happens? The what ifs. What if rates rise? What if your expenses rise? There's always got to be a certain level of, conservative borrowing. So that's coming into play. It's already into play. It doesn't change the fact. Moving forward, the reality is that you need to line everything up. If you're applying for finance, be it home loans, investment, commercial, business, whatever, you need to do your homework. You need to speak to someone who's in the industry. You can't just guess it. It's not like throwing a dart at a dartboard and going, oh, look at that, got the bullseye. The banks are becoming very selective with the clients that they want. They want the clients who are just ticking the boxes. There is a push in the next 12 months to move to a platform called open banking. Has anyone heard of that?
No.
Okay. Open banking is based on, so in 2008, 2009, when we had the GFC, banks in the US and the UK were falling like flies. There was government bailouts left, right and centre, and subsequently they created a platform called open banking. The concept behind open banking is to allow the banks and the clients to talk together, or talk to each other. The client inputs their details, the bank has access to that information. They can look at all your savings, all your home loan history, your credit card history, your personal loan history. It hasn't quite passed the privacy test within Australian banking standards yet, but it's coming. So I think their push is for that to come into play as of July 2019, subject to privacy and the requirement to hit internet banking. What that does, it's going to be a blessing and a curse, because open banking means 100% transparency. The bank can see everything. They will see your savings history. They will see your expenses. You can't hide from what your actual situation is. If your income's $3,000 a month and you're spending $2.5, the bank will see that. That'll all play a part with genuine lending, your genuine savings, I should say.
And how long will banks look at that for? 5, 10 years, or 6 years? What are they looking at?
I don't know. It's only just starting to be spoken about in mainstream media. I only heard of it. I heard of it before I went down to the conference last week. All I know is at this stage it doesn't meet the privacy guidelines of the Australian banks. Because
I think that you mentioned a while ago that they're looking at your credit card history and how
there will be
and how far back would that go?
3 months.
3 months.
But the thing is, there's a transition. So at the moment, you've got credit reports. So your credit history, you can access all your negative credit history. So when you apply for credit, when you've fallen in arrears, when you're bankrupt, and everything like that, in the coming, 12 months, let's say 12 months, there'll be a transition to positive credit history. When did you pay your bills on time? Oh, tick, tick, tick. If you hit you pay all your bills and that shows up as a good thing. The theory is that positive credit history will allow you to approach a bank and say, right, well, I'm good. Subject to affordability, I'm good. I can pay all my stuff, give me a better rate. That's the theory. Whether or not it comes into play is a different story.
In parts of China now, they're actually rating you on your social status for insurance premiums right now. So just like Facebook likes, the amount of likes you get.
Really?
Really?
Yeah.
Fantastic.
All those little
It's on film.
So it's a social media platform that will judge your status within a social setting. Will govern the premium of insurance you will pay.
So Phil, like you were saying before,
Yes.
we went back to the UK for a bit,
Yep.
obviously. And when we went back there, what you're saying is, when we went to the bank to get a house loan over there, in the end we had a loan from here to do it there. And what they said to us, we need to see you paying interest on your credit card, which gives you the credit to loan. So we'll use our credit card and we pay it off, but we've never gone into debt with our credit card. So as far as they're concerned, we haven't got credit against our name to pay it back.
I don't agree with that. It's a philosophy. It's the
We
same
had to
philosophy as
go
what
back to the
I had when I was working at the bank. I used to have people come in and say my broker wouldn't lend me money because I didn't have a credit history or credit score.
Credit rating.
And you look at it and go, that's a good thing. Like, just because you haven't got one doesn't mean that you don't exist.
No, it's because they couldn't track our payments and if we were down or up, they couldn't track because it was paid off.
But as I was saying, it doesn't. In Australia, not having credit history is a good thing. Works to your favour.
Never used history.
Yeah, I know.
If you didn't have a credit history, you wouldn't get a loan no matter
Yeah.
what.
Because we have to come back here and loan to go back to the UK to get the loan.
Bit of a long
He wouldn't give us it. even though-
application process, isn't it?
Well, no, I'm saying we'll slow put it through on our mortgagee to get.
But I've been told as well, getting an application, having a home loan over in the UK takes like 6 weeks, 6 to 10 weeks or so, versus here you can have have it done and dusted
I'm
within
talking
4
about
weeks.
3 months.
3 months, yeah.
Once it took us in there.
So yeah, I don't fully understand the UK model, but
Takes
that's
6 months.
open banking is coming, and that'll be the next part. The other aspect of open banking is to see I guess the transition of bringing on more competition. So unless the big four don't follow, or the main Australian banks don't follow, it'll see a rise of the smaller lenders who actually embrace it, actually stepping up, which could see a more competitive rate and product offering. So I guess that's where we're going in the next 12 months. What we spoke about last week was along the lines of there's the known knowns. This is confusing. There's the known knowns, there's the known unknowns, so hypothetical, and then there's the unknown, which no one knows. But we know there's something coming, we just don't know what it is. The Royal Commission does not finish until the report comes out in February next year. Until that day, we don't know what tomorrow brings. It's going to be a bit of a trial by error, see what happens. The environment in the last 6 months in particular has been a bit of a shake. And as I said, it's all about keeping your finger on the pulse. If you're not up to date, you don't know. And this is where that living expense form plays a part, because this is the information the bank's asking. And next year they'll have full transparency of it. So you embrace it now so that you can ensure that you're putting yourself in the best financial position moving forward, or you turn around and stop.
But at the end of the day, it's to make sure that you don't borrow money that you cannot afford to pay back.
Absolutely.
what
That's the other part of it, is in the fact that the banks now, because of all these lawsuits that are coming into play, like millions of dollars, trillions of dollars, they now need to realign it with customers' best interest.
Can I tell you a funny story?
Sure.
When I broke up with my partner many years ago, we bought a house.
Yep.
But I left, and because I paid the mortgage, he didn't pay the mortgage when I left. And then after 2 years, so just to make a long story short, the bank said to him, "Well, sir, because you're not paying the mortgage, you have to, leave the home."
Mm.
And he decided to take the bank to the ombudsman.
Mm.
And he said, well, he argued, he said the bank shouldn't have given the loan in the first place because he couldn't afford it.
Mm.
And he won the case.
He had his loan paid out.
Yes.
Yep.
And he got 20,000 given as well. He didn't have to pay any,
So
nothing.
who was his lawyer?
But no, look, and that's a valid thing.
The ombudsman.
This is where these penalties are
Incredible.
coming into play. Right here, right now, this is where the penalties are, and it all comes down to knowing your legal, because if you're understating that, and the bank finds out, that's any case that you take to them, gone.
You're
So-
only doing yourself an injustice.
Well, you are, exactly right. But look, anyway, that's my opinion of everything that's going on. I've gone completely off script, so I apologise for that.
No, it's good.
Hopefully I've made it, hopefully everyone understands it a little bit more now.
Yeah.
And from there we'll see what happens. As I said, in the next 12 months will be interesting.
We'll probably stick around for questions, but thank you very much indeed.
Thank you.
Thank you.
Banana.